This question tests your understanding of performance measurement and responsibility accounting. A division manager's performance should be evaluated using measures that are controllable by the manager and that reflect the division's operational efficiency during the budgeting period. The phrase, "except," is important because it asks for the item that is not an appropriate goal for evaluating a division manager's efficiency. Typical performance goals for a division manager include budgeted operating income, which measures the division's ability to control revenues and costs, targeted market share, which reflects competitive performance and sales effectiveness, operational efficiency measures, such as improving productivity or reducing unnecessary staffing while maintaining output. In contrast, earnings per share (EPS) is a corporate-level financial measure. EPS depends on the combined performance of all divisions, financing decisions, capital structure, taxes, and the number of shares outstanding. An individual division manager generally has little or no control over EPS, making it an inappropriate measure of divisional efficiency. The key principle in responsibility accounting is that managers should be evaluated based on factors they can influence directly. A. Budgeted operating income. Incorrect. Operating income is a common and appropriate measure of a division manager's financial performance. B. A targeted share of the market. Incorrect. Increasing or maintaining market share is often an appropriate objective for divisional management, especially in competitive industries. C. Earnings per share projections. Correct. EPS is a company-wide performance measure, influenced by many factors outside a division manager's control. It is therefore inappropriate for evaluating divisional efficiency. D. A reduction in the organizational structure, fewer employees doing a given amount of work. Incorrect. Improving productivity through organizational efficiency is an appropriate operational performance goal, provided quality and service are maintained. Correct answer. C. Earnings per share projections. A division manager should be evaluated using controllable financial and operational measures, such as operating income, market performance, and productivity improvements. Earnings per share is a corporate-level metric that reflects the performance of the entire organization and is not an appropriate measure of an individual division manager's efficiency. This question examines the selection of appropriate performance measures for a claims processing department. An effective performance measurement system should encourage behaviors that improve efficiency, quality, timeliness, and customer satisfaction, while remaining within the manager's control. The question asks which measure would have the least positive effect on the manager's motivation and performance. In other words, which measure is least useful for evaluating how well the claims processing unit operates? For a claims processing department, managers can influence processing cost per claim, reflecting cost efficiency, average processing time per claim, reflecting service speed, percentage of claims processed accurately the first time, reflecting quality and error reduction. These measures directly relate to operational performance and can motivate improvements. However, the total dollar amount of claims processed per month depends primarily on the value of claims submitted by customers, which is outside the claims manager's control. A manager cannot control whether claims are large or small in dollar value, so this measure provides little information about the department's efficiency or effectiveness and may reduce motivation because performance depends on external factors. The key principle is that performance measures should reflect controllable activities and encourage desired behaviors. A. Processing cost per claim. Incorrect. This is a useful efficiency measure that encourages cost control. B. Average processing time per claim. Incorrect. Timeliness is an important operational measure that motivates faster service. C. Percentage of claims processed accurately the first time. Incorrect. This quality measure promotes accuracy and reduces costly rework. D. Total dollar amount of claims processed per month. Correct. The dollar value of claims depends on customers' medical expenses rather than the claims department's performance. It is largely outside the manager's control and therefore provides little motivation for improving operational efficiency. Correct answer. D. Total dollar amount of claims processed per month. The total value of claims processed is not a meaningful indicator of the claims processing manager's effectiveness because it is driven by external customer activity rather than internal operating performance. Measures of cost, speed, and accuracy are much more appropriate for motivating and evaluating the manager's performance. This question tests your understanding of goal congruence and performance measurement systems. Goal congruence exists when the performance measures used to evaluate managers encourage decisions that are consistent with the overall objectives of the organization, rather than merely improving one aspect of performance. Paul Cooper manages the shipping function, whose primary responsibilities are to deliver bakery products accurately, on time, and at a reasonable cost. Therefore, an effective set of performance measures should provide a balanced evaluation of service quality, accuracy of deliveries, timeliness, meeting delivery schedules, cost efficiency, controlling distribution costs, and customer satisfaction, meeting customer expectations. If performance measures emphasize only cost reduction or only productivity, managers may sacrifice quality or customer service. Likewise, focusing only on safety or speed provides an incomplete assessment. The best measures should encourage managers to balance cost, quality, and service, thereby supporting organizational goals and customer satisfaction. A labor cost per order, transportation cost per order, number of orders completed per day. Incorrect. These measures emphasize cost and productivity, but ignore delivery accuracy and customer service, potentially encouraging poor quality performance. B. The percentage of orders filled on time, the percentage of orders filled accurately, average cost to fill and deliver an order. Correct. This combination balances timeliness, accuracy, quality, and cost efficiency, encouraging decisions that align with the company's overall objectives and customer expectations. C. Customer satisfaction, elapsed time to complete an order, percentage of orders filled accurately. Incorrect. Although customer satisfaction, speed, and accuracy are important, this set lacks a cost measure, making it less balanced than option B. D. Orders completed per employee per day, employee injuries per hour worked, number of vehicle accidents per year. Incorrect. These measures focus on productivity and safety, but do not directly measure delivery quality, timeliness, or cost effectiveness. Correct answer. B. The percentage of orders filled on time, the percentage of orders filled accurately, average cost to fill and deliver an order. This combination provides the highest level of goal congruence because it balances customer service, on-time delivery, quality, accurate orders, and cost control, encouraging the shipping manager to optimize overall organizational performance rather than focusing on only one dimension.